we've been here a long time. The world has changed since we started here. Think about it. We've been here for 25 years, and I mean, there were no signs of anything crypto when we started. I mean, what was crypto? You know, Today, how many people know a little bit to be dangerous and mess around with it? How many people have a Coinbase account? Anybody? How many people have been scammed and lost money from people that have burned you in crypto and got fished or anything? Nobody? Okay. All right. Well, I am very fortunate that I befriended Ian Bellina here. Ian, you may have seen him over the years as an expert in CNBC. He's been in a bunch of different magazines, but he is an author, an entrepreneur, and a world-renowned investor. I have invested with him. It's crypto. It goes up and down. Life by design, sometimes you can end with zero fast in crypto. Be very careful. Pay attention. Ian has built a reputation as a visionary in the world of digital assets using data-driven insights to help investors navigate the rapidly evolving market. His insights, like I said, are on CNBC, Bloomberg, and Forbes, and he continues to be a sought-after speaker and thought leader in the crypto community. Please give it up for my dear friend Ian Bellina!
Thank you, Andy. Good job, you.
That's beautiful. Fine.
We ready? As we like to say in crypto, not financial advice. All right, so show of hands again. Who here is in crypto? Who here has no idea what crypto is? Show of hands. Who here thinks crypto is a little sketch? All right, glad for the honesty. So I'm here today to hopefully give you different perspective and hopefully give you a coming to crypto Jesus moment. This is a moment everybody goes through when they see the future, they see the writing on the wall, and they realize this is going to happen whether you like it or not. Okay, so Randy, thanks for the intro. I'll skip this part. Actually, I do have a book available on Amazon and Audible called The Crypto Investing Guide. So if you are crypto curious, definitely go check it out. Whether you like audiobooks or Amazon, there's also a PDF. Can you guys hear me? Hello? This better? Okay. Yeah, so quick intro, as Randy mentioned, I've been in crypto since 2016. I got in when Ethereum was about $8, $9. Basically quit my job at IBM. I was young, successful, but I realized crypto was the future. And I did not want to miss the future of open money, the future of the next internet. So basically quit my job at IBM Watson. I was working with AI already, took what I was doing at IBM in terms of applying analytics to line of business. So think sales, finance, IT, and apply this towards crypto. So I'm going to try to go fast. I'm going to try to give you a quick whirlwind tour and education on what crypto is and why I think this is the biggest technological shift in human history, alongside AI. Quick history. Bitcoin launched in 2009. Why was Bitcoin so foundational? Bitcoin created the world's first blockchain. Why is the blockchain so powerful? Why is it so innovative? Well, let's take a step back. There are three versions of the internet. We have what's called Web 1, where websites would just post data, and you would basically just read that data online on the internet. Then we had Web 2, where the end user also had the ability to write data. Read, write. Think social media sites, being able to generate content, blogging, comments. Then we had Web 3, the decentralized internet, where now it's not just people just reading and writing, but you're taking out the central entity that controls the trust. Two people can interact on the internet and still have trust. That was the beauty of the blockchain, and that's the beauty of crypto. Who here recalls the dot-com boom? I think pretty much everybody here, right? I was pretty young when I was going through it, but I saw that was the future. I learned how to code when I was 10 years old, got an old computer, fixed it up. My first language was QBasic. Then I saw social media happen. And when I saw the next internet happening in crypto, because people think of crypto or Bitcoin as money, Yes, it's money. Yes, it's open finance, but it's a bigger vision than that. It's the next version, the next iteration of the internet. So let me just go over two concepts in crypto. What does centralized mean? Centralized means that there's somebody in the middle. Take, for example, a bank that acts as the clearinghouse. They act as a third party that has to vouch for any transaction happening. That's called a centralized transaction. But in crypto, the power of Web3 is we're taking that central entity out. So imagine being able to transact financially with no bank. That's called a decentralized transaction. And why that can be done and be trusted is due to innovations in cryptography that are applied and created via the blockchain. The evolution of money. Money started with bartering, then we went to physical items, then all the way to coins, to cards, to digital money. And yes, digital money is great, it's very fast, whether it's PayPal, Cash App, but there's still a central party that controls that trust of that transaction. With crypto, with Web3, we're basically removing that central entity. And Bitcoin was the first digital cryptocurrency to do that via the blockchain, where there was valid proof that two people who couldn't trust each other, they could be on opposite sides of the world, could still transact with each other with trust, with guaranteed trust. And why I say you should view crypto and Bitcoin like the internet, this is a chart that shows the adoption of Bitcoin and crypto versus the internet. How many here know that Bitcoin and crypto is growing faster than the web? Right? The mayor over there. Think about that, right? It's not just a bunch of digital money or being a Ponzi scheme. This is literally a technology that is growing faster than the internet. This is a chart that basically shows, if you go back to 1990, when the internet basically began spreading, and lay that chart of the user adoption of Bitcoin and crypto versus that growth, it has a faster rate of speed of growth and adoption than the actual internet. That's why we go back to this other slide of saying this is Web 3.0. This is the internet 3.0. And the growth backs that up. Okay, after Bitcoin was created, we go to 2015, we have Ethereum. Ethereum is basically smart contracts. What does that mean? Being able to program transactions and put them on the blockchain. So the whole pinnacle of Ethereum are called smart contracts. So imagine Bob and Alice want to transact. Let's say I want to buy a house. Let's say I go to Randy, I say, Randy, I want to buy a house. Normally, there'll be a lot of middlemen. Title insurance company, lawyers, brokers, insurance. But guess what? They're all writing contracts. So with Ethereum, they coined this new concept called code is law. Being able to program what you would typically write into actual code and put it on the blockchain to guarantee trust. And everything became fully automated. Right? So I'll go through some examples of why that's so innovative. And that led to basically the second revolution of cryptocurrencies. That was the token sale era, that was the ICO era, where people were able to raise funds online via smart contracts, where you could basically program, for example, investing 1 Ether and getting a token back. This led to DeFi, decentralized finance, and NFTs, non-fungible tokens. Who's heard of DeFi and NFTs? Okay, that's good. Okay, so going back to the concept of centralized finance, centralized transactions, basically think Web 2.0. Here we have, basically, think of this as TradFi, traditional finance. All these different services that are being done by centralized entities, whether it's money, central banking, exchanges, insurance, payments, asset management, being done by centralized entities. In Web 3, we can do all that on the blockchain and have trust with no central entity. So for all of these different services, the Web3 version is already doing just that. That's called DeFi, decentralized finance. And did you know, in DeFi, this is from this week, there's almost $100 billion happening on Web3 on DeFi. And it was higher back in 2022 at the peak. It reached almost $200 billion happening in terms of total value locked, total assets on the blockchain in these Web3 entities for DeFi. Let's go to NFTs. So the concept of NFTs basically comes from two concepts. Fungible, where you can basically have mutually interchangeable goods or products. For example, money, fuel, commodities. NFTs, basically think of it as kind of like digital collectibles, right? Baseball cards, houses, art. Who here buys art? Okay, I'm also an art collector as well. When you buy a piece of art, they give you what's called a certificate of authenticity. Basically, it's a certificate, think of it kind of like a serial ID or number that shows you own that piece of art. That way, you can't just pick up anybody on the street and say, I own a Picasso, because there's an actual inventory of all the owners of a Picasso, and the whole world knows that. So NFTs took that same concept and said, let's put it on the blockchain and not have a central clearinghouse gatekeeping that access. What if it was open source? What if it was an open public ledger of all the artwork? That's basically NFTs. And there are lots of different marketplaces for NFTs. The biggest in the space is called OpenSea, and they've moved more than 14 billion in volume. Then there's also other platforms like Top Shot, where the NBA has a partnership with them, where you can basically buy NBA basketball cards online on Top Shot. And this is pretty interesting. While the NFT market has kind of decreased in terms of transactions and trading volume, it still moves a lot of liquidity on a daily basis. Almost $1.8 billion is moved. $1.8 million is moved daily just in NFTs, just in NFTs being transacted on these different marketplaces. This is just for one exchange called OpenSea. Then we also have OpenSea monthly volume. Almost 65 million is being moved on OpenSea. So while it's not that big relative to where it was, this is still happening right now. People are trading digital art on the blockchain. But now we move forwards in the future, move to 2024. We have the fourth Bitcoin halving. So the way Bitcoin works is basically using code. It mints blockchain. It mints a new Bitcoin every 10 minutes. And every 4 years, the issuance rate of new Bitcoin gets cut in half. That's called the Bitcoin halving, right? Bitcoin is capped at 21 million total Bitcoin. But don't think of Bitcoin like money. Initially, that was the idea, but it's not really money. It's gold. It's digital gold. It's the gold of the next internet. It's gold of Web 3.0. Why the halving matters is we're now getting institutional adoption. We're getting ETFs. And this is the launch of the Bitcoin ETF. It was one of the most hyped ETFs of all time. And late last year, it surpassed the QQQ ETF in terms of fund flows. Think about that for a second. This is digital gold, digital money, finally getting institutional adoption and surpassing QQQ in terms of ETF fund flows. These are the top ETFs last year. We have the S&P 500 ETF, and the next version by iShares. Bitcoin Trust ETF by iShares is number 3 in terms of fund flows last year. So Bitcoin and crypto now finally has institutional adoption. This is a huge green light for crypto. But how does this relate to AI? Because I think the two are intertwined. AI and crypto are like a marriage made in heaven. So let's take a step back. Think of cars. Going from horses to cars was a huge technological shift, 5x increase in speed. Going from cars to airplanes was a 10x technological speed increase. Going from planes to autonomous intelligence, we'll say AI, we'll say quantum computing, as the other speaker mentioned the other day, we'll say robotics, infinite speed. But this is why it's so crucial to realize why AI and crypto are tied together. AI creates value at machine speed. Crypto moves that value at the speed of the internet. Just think about that for a second. There's a reason why there's a czar in the White House that does both AI and crypto. The two are intertwined together. Okay, so why does AI need crypto and vice versa, right? We know how AI is taking the world over. AI agents is the biggest trend of 2025. How do those AI agents interact with each other? If you have an AI agent from America versus one in Europe versus one in China, how can they interact and trust each other? That's crypto. That's literally the definition of crypto. You can program digital money. And what about models? Who owns these models? Whether it's OpenAI, who's maybe not really so open, or Meta, or DeepSeek, how can you actually trust who owns that data? Through crypto, through the blockchain. There are already products out there that do on-chain provenance and governance for crypto AI models. And how do we trust those outputs? If ChatGPT gives you an output, how do you know they're not making stuff up? How do you verify that? You can put that on the blockchain. That's called on-chain inference. So all of these different needs for AI, crypto is kind of a glove that fits perfectly with everything AI is trying to do in terms of keeping it open, right? Because if open source AI wins out, crypto is open source. Open source money and the internet will also win out. So crypto is basically a financial layer for AI. So this is a chart from basically showcasing all these different AI products in Web 2.0 and their counterparts in Web 3.0. And this is very, very early. Crypto is still young, but there are already lots of different counterparts that are building the same equivalent of all these different models, whether models, compute, data, AI agents, and applications. There's a Web3 version trying to do the same thing by taking out the central entity, keeping everything fully decentralized. Okay, why is crypto the future? So now we see why crypto and AI potentially are tied together. Why is crypto the future? Basically, everything is going digital. Did you know? Who here knows what a stablecoin is? Quick show of hands. Think of a stablecoin as basically a cryptocurrency backed by actual dollars. So the biggest one is called USDC. It's minted by Circle. They're about to IPO soon. But basically, you go to a bank, you give them money, and they give you a digital token that represents that dollar. So stablecoins, in terms of volume, move more volume than Visa as of last year. The entire Visa payment network, there's more money being moved around globally via stablecoins than on Visa. That is pretty wild. And that's not slowing down anytime soon.
Why did it flatline for 3 years?
Why did it flatline? Bear market. But
So that's just the value of the crypto versus the volume of the transaction?
that's the transactional value. The transactional value of the stablecoins. I'll take questions at the end. Basically, the value of the transactions being moved. But back to stablecoins, right? How do stablecoins work, right? How does that amount of money being moved on the blockchain surpass the entire Visa payment network? Well, you basically have your bank account with money on it. You can go to a platform like Circle, give them the money, kind of like you give it to a bank, and they mint a cryptocurrency and put it in your wallet. This is heavily used by lots of institutional traders and funds, and they're one of the biggest companies in all of crypto. As of right now, there's only about one big, really crypto-native company, Coinbase, that's IPO'd in the US, not counting Bitcoin mining companies. And there's about to be a second one, Circle. This company that does this is valued at billions of dollars and about to IPO. And this will be the second big green light for the entire crypto and Web3 community. Going back to AI being the next evolution of technology, there are more than 30 billion API calls happening a day. Basically, AI agents are talking to each other. They're already connected. They're already autonomous. Crypto and Web3 is the way to really trust and verify this in an open manner. I mentioned about DeFi and how you can actually program ownership. Code is law, on-chain. But this is a very interesting stat. Amongst Gen Z investors, 55% own crypto. Only 41% own stocks. Think about that. The future generation is already more heavily involved in crypto than they are in stocks. So this is why the adoption of Bitcoin and crypto is surpassing the adoption of the internet. But if you rephrase it and think about it, the adoption of Web 3.0, of course, will have a faster adoption than Web 2.0. And that's why I love crypto. But I love the talk from the earlier day about flows, right? About finding the flows, getting unstuck, taking the rock out of the flow you're in. So we've seen all these different metrics, but all of this was when crypto was swimming against the current. Crypto was not in flow. And now for the first time in history, crypto will be swimming with the current. Crypto will have flow for the first time. Just think about that. The adoption of crypto and Bitcoin is surpassing the internet against the current. For the first time now, it will be swimming with the current. Right? So there's a lot of new policy happening, right? So for example, whether tariffs, whether income tax repeals, but the key that matters is the White House wants to make crypto, or rather make the US the crypto capital of the world. Because this is really a national security matter. We don't want China to win the race of AI. We don't want China to win the race of crypto, because the two are tied together. That's why there's an AI and crypto czar in the White House. And he's doing both of these key things. And I showed the chart about stablecoin volume, a transactional value, surpassing Visa. That was without really much clarity. Right now, there's a draft executive order, probably by the fall of this year, to create a clear clarity for stablecoins for TradFi institutions. So think your bank, Chase, Bank of America, Capital One, whatever, being able to actually custody stablecoins. That will unlock a huge amount of transactional value for the whole internet, or Web 3.0. And that's going to be happening soon. That's being done by the AI crypto czar. And then there's also an order for the US to buy up to 5% of the total Bitcoin supply. There are only 21 million Bitcoin. And a good portion have been already mined, more than 18 million. And the US says we want to make sure we own at least 5% of the total Bitcoin supply for national security issues. So I mentioned Bitcoin moves in halvings. Every 4 years, basically there's a cycle where the rate of issuance for new Bitcoin is cut in half. Why is this so pivotal for investing in crypto? And why does this create an ideal time to invest in crypto? Because if you just go through the history of Bitcoin and you just divide it by halvings, we have what's called a pre-halving rally and a post-halving rally. And the returns that happen in Bitcoin are significantly larger during a post-halving rally. We call this the bull run, basically, in crypto. Sometimes also altcoin season. Now, with each cycle, the returns do diminish, but why this chart is pretty crucial, what typically happens in crypto, people make money in Bitcoin, they take profits once Bitcoin goes up, and they move that new money or profits into other crypto assets, whether stable coins, whether altcoins, which are basically every other cryptocurrency besides Bitcoin. But why this chart is pretty powerful is, while the return on investment on Bitcoin decreases, the length of the post-halving rally increases. On average, about 25% longer every cycle. So that's what my company does, pretty much. We've been in crypto since 2016, but we apply AI to investing in crypto. And we have what's called a market indicator that goes through, looks at various different tokens, gives them the grade. Think of it kind of like a credit score. And this is our indicator. It actually just turned bullish this week, a few days ago. And it was bearish on January 18th, when the crypto market peaked at about 3 trillion total value. But it peaked or flipped bearish 2 days before the inauguration. So this is why we love looking at the data, because while we were heading into flow and we're getting unstuck and all the policy and creating the framework on crypto being in the US, our indicator said bearish. Basically, get out, take profits, or just hunker down. Winter is coming. But this is the beauty of crypto. All this data is open source. All this data is available on the blockchain. Who here uses platforms to invest in crypto? What platform do you use? Robinhood? Okay. Anybody else? Okay. Yeah. So there's a lot of data, and crypto can be very, very confusing. So our platform is kind of like a GPS guide for crypto. It basically is kind of like your ChatGPT for crypto. But I'll just kind of speed through this quick. You can check it out. Just go to tokenmetrics.com. But why Sorry. But when it comes to investing in crypto, I think everybody needs a guide, whether it's our platform or whether it's a book. We have a book called Crypto Investing Guide, where we go through and we have created a framework we call token metrics. It's kind of like Moneyball. We took that same approach of the Oakland A's. How do you find value? I know it may sound far-fetched, but how do you value invest in crypto? That's what we do. That's what our platform helps people do. We cater to traders as well, but even our fund, we like to value invest. We like to get in early on the ground floor. But there's actually a framework to doing that. And the framework is, first, you look at the fundamentals, right? So in the same way you would look at investing into a startup, it's the team, the tokenomics, the roadmap, and then the technology. Technology is vital for investing in crypto. So is the code open source? What's the quality of the code? Is there any activity on GitHub by the developers? Or have the developers just completely vanished for the last 1 year? All this is data that's available in crypto, but it's very hard to gather and to analyze. All data on exchanges. We talked about Robinhood, talked about Coinbase. There's also lots of data on DEXs, decentralized exchanges. That was one of the beauties of DeFi. You're able to actually buy crypto assets without going to Robinhood or Coinbase. You can go to a platform like Uniswap or Aerodrome and buy a crypto asset peer-to-peer, all fully on the blockchain. So all these are different ways of researching crypto, and we like to take a data-driven approach and call that token metrics. And we like to teach people how to do it. Definitely encourage you to check out the book. Or if that's too much for you, check out our platform. But this framework has helped us find early wins in crypto. So who here has heard of Polygon, Chainlink, Helium, or Filecoin? Which one have you heard of? Polygon, okay. Filecoin, okay. Anybody else? Polygon? Yeah, so actually funny story. When I quit my job at IBM to go all in on crypto, we went on a crypto world tour. We went to over 35 countries in 12 months, basically hosting pitch competitions, kind of like a traveling Shark Tank. And one of our investors in our network in India had just recently invested in Polygon and invited them to pitch at a blockchain competition in Hyderabad, India. This is Sandeep, one of the 3 co-founders of Polygon, pitching. And they ended up winning. And that was when Polygon was kind of launched to the whole world. This was live streamed on our channel on YouTube to more than 10,000 people when this happened. And the rest is history. But why I bring this up is, as Randy mentioned before, investing in crypto is very, very risky. There's a lot of, because it's still very early. It's like investing in the dot-com era. How do you navigate that space? And having a framework of both fundamentals and technology and applying that kind of like a credit score helped us find these early wins. And the reason I want to go through all these different projects is people don't really understand much of crypto. They see Bitcoin, but they don't really know, is there actual real value being built in crypto? This is, after Polygon pitch contest, we went to San Francisco, August 2018, and I'm at the offices of Helium Network. They were building basically this Wi-Fi device called a hotspot that you connect to your Wi-Fi, and it lets you share your internet access in exchange for crypto, right? Initially, it was just for IoT devices, and they went to more than 1 million devices and now have partnerships with companies like T-Mobile. But from there, they were able to piggyback and build the next iteration of that called Helium Mobile. It's a wireless telecom carrier. I actually have them on my phone. So when I'm traveling, I can connect to their wireless network, and it's all purely crypto. So it's a Web3 wireless telecom carrier, basically. And the way it works is they have partnerships with T-Mobile, for example. So if T-Mobile runs out of room, they can send that data or information to Helium Network. Then we talked about AI. So there are 2 terms or 2 sectors in crypto. One is called DePIN, which stands for Decentralized Physical Infrastructure Networks. So Helium, for example, is a DePIN. If I go back, Helium, this is a DePIN. This, if you like real stuff, real assets, DePIN is your sector. DePIN are basically physical devices that are tied to Web3. For example, Helium. And Peak. Peak is basically a blockchain, kind of like Bitcoin, but for DePIN, for physical devices. So think, for example, cars, Tesla machines, electric chargers, even software, all that being put on the blockchain. And then we also have DePi, which stands for Decentralized Physical Artificial Intelligence, robotics, basically. So if we're talking about robotics being the future, there are already blockchains for robotics in crypto. This is an investment we're very, very bullish in, because as mentioned before, we think AI and crypto will do well, but I think robotics being tied to AI is something people are not really valuing much. And one of my other favorite companies, we invest in a lot of companies, made over 40 investments via our fund, but this is one of my favorite as well. It's called Andrina. They're launching a cryptocurrency called Dawn Network. Think of it kind of like Starlink for Web3. Because we have blockchains, we have cryptocurrencies, but now we're building the actual physical infrastructure. So this is an actual physical device. Think of it kind of like a Starlink dish or Dish TV, Direct TV back in the day. You put it on your roof, and they're building a last mile network. Kind of like how Helium Mobile has a last mile network, or rather a telecom network. They're building an actual ISP. So imagine the future. Imagine where you can connect to an ISP that's on the blockchain, an ISP that's in Web3, or a telephone carrier that's in Web3 on the blockchain, and use applications that are on the blockchain. So basically, the entire technology stack is going Web3. And I just want to show you some real-world applications and use cases happening right now in crypto.
Just real quick, where are they launching that?
So they began in Mid-Atlantic, so New York and Philly.
Not San Francisco.
No, not yet. That was expensive.
Well, what's the use case for that?
Good question, right? So basically, if you have internet access, you can buy that device, and you can basically reshare that with other people on the network.
So like a wireless modem or like that modem or something.
So basically, they're trying to build independence, right? So other ISPs or other data centers, for example, can buy the device and offer access to a larger area. So if people want to go online and not have to go through some other different ISP, they're creating different alternatives that are purely on the blockchain. And for anybody that is able to help bootstrap the network, kind of like with mining Bitcoin, if you buy a device and you mine Bitcoin, it pays you in crypto.
You put a lot of money in that one?
Yes, I angel invested and our fund invested in it, actually twice.
Good luck.
Thank you. This is one other one called Vana. So I talked about how AI and crypto are tied together. They're trying to take all the data that's being trained for LLMs and make it user-owned. Right? So imagine ChatGPT is trained from the whole internet. Meta and all these other AI agents and AI LLMs are being trained on the whole internet. But users don't actually own that data. So what they're trying to do is give actual ownership to that on-chain data. Then the last one I'll share, Parcel. Who here has heard of Polymarket during the election? So they're basically the Polymarket for real estate. Polymarket was basically a platform that lets you do predictions on the blockchain, actually on Polygon's blockchain. So they're able to create different markets where you can go and say, I bet this person will win this race or this team will win or lose, and it's all purely on the blockchain. So Parcel is doing the same thing for cities. So for example, if you can come here and see what the price of Austin is, or the price of Miami, or the price of Dubai. You can see different cities being traded, and if you want to hedge your position, let's say you're working in real estate, you can hedge your position and basically short a market on Parcel, and vice versa. If you have some info, you think Austin or some other location is going to go up, you can come here and go long on a particular crypto or location. Okay, let me just go through this pretty quick. So one other company to keep an eye on is called Zero G Labs. They're basically trying to build the first decentralized AI operating system. So they're taking the entire stack of AI and trying to create kind of like a whole ecosystem that's just plug and play. So for example, if you want to use GPUs, there are crypto companies that let you buy GPUs through crypto and are purely on the blockchain. Then one last one. They're basically building a blind computer. They're taking multi-party computing, basically MPC, because we have this whole world of crypto, but we still have Web 2. Web 2 is trying to bridge over and bring this data. How do you bring over healthcare data that's very private, that has HIPAA laws and compliance? How do you bring over social media data or financial data? Well, using technology and cryptography, they're able to compute without knowing what's underneath the data. All right, just think about it for a second. We can now finally bring data that is very private in nature and put it on a compute layer in the next internet. All right, yeah, but basically just to recap, think of crypto not just as digital money, but as the next iteration of the internet, as Web 3.0. We had Web 1.0, where you can basically just, the website can post data and you would consume it. We had Web 2.0, where you're able to interact with it, social media, Facebook, Instagram, YouTube. Web 3.0, where you take out a central entity. Thank you.
I know you guys have to have a few questions.
Yeah, if you have any
right?
questions, let me know.
Yes, no, any questions? We got the catch box.
Yeah?
All right.
I don't think
Hello.
it's working.
Oh, there we go. Thanks for coming. A lot of interesting ideas. A lot of them I'm super curious about. A couple of them related to kind of compute. So basically renting compute, I think is, I think there's two of them.
Yes,
You
yeah.
know, kind of like CoreWeave or Lambda Labs. Why would I want to rent compute on the blockchain? I don't even actually understand what that means. Maybe you could help me understand that first. What's that?
Why you would rent compute on the blockchain?
Yeah.
Well, one
And
for
how does
one
that
reason.
even work?
Right. So one reason, like there's different GPU providers that have compute, you get better rates. Imagine 25% compared
Why do you
to.
get better rates? Because chip costs and electricity, which are the main components, right, of metal, that's
Yeah,
basically
so
rented. So why is it cheaper on
great-
the blockchain, quote,
Great,
quote?
great example, right? So there's one company we invested in called Bless Network. They basically allow you to download a browser extension on your computer. And within the last 6 months, they have more than 1 million computers signed up. And whenever those computers are idle, they can volunteer their computing resources for compute. That's one aspect. One other company we invested in is called Koi Network. They're doing the same thing, except it's an actual application. I have it on both computers. But basically, whenever it's idle, you're volunteering your compute.
There's dozens of companies doing that. But
Yeah,
that's,
but-
what's,
but
how does that
basically-
relate to the blockchain?
What is that really?
Yeah,
Well,
how's
the
that?
crypto companies. I'm getting there, right? But basically, you're getting regular Joe and Jane with their computers to join the network, right? If somebody has an NVIDIA chip, they can join the network. They don't have to be with CoreWeave. You're giving them a way for them to earn money, basically, right? And companies can go on there, put up a job, and people on the network can come in, mine that job, and they'll pay them in crypto, and vice versa. So they're creating kind of these almost think of it kind of like Napster for GPUs, basically. And they're able to leverage that to get better rates.
The blockchain portion is really the payment rails of he's
Yes.
paying in crypto. It's not really the
It-
compute
well,
is not on the blockchain.
It's the
itself.
incentive rails and the payment rails, yes.
Could you explain what does it even mean to win or dominate crypto, and why does it matter to anyone in this room, whether it's the U.S., China, or any other country?
Okay. Why the US ideally should win the crypto race?
What does it even mean to win? I just don't understand. Like, what does it mean to win or dominate?
Well, take for
crypto?
example, right?
And why should anyone care if the U.S. wins or someone else wins?
It's kind of, I had a slide on this. Basically, if we go back to stablecoins, for example, the biggest stablecoin in the world is a US dollar stablecoin. Actually, two of them. USDC by Circle and USDT by Tether, right? Now, imagine a world where that is not backed by the US dollar, is backed by the Chinese yen, or it's backed by the Russian ruble, right? So
Why
it's
does it
really a
matter
way
to
of,
anyone other than an individual investor or a company like yours.
well, it's more of a, it affects the entire economy globally, right? Because the US is basically used as the medium of exchange. The US dollar is used as medium of exchange globally, right? And the US wants to protect that very deeply. They don't want that to go to anybody with different principles, whether it's Russia, whether it's China, right? And if we're evolving into the next internet, they want to maintain that dollar standard.
Great presentation. And I have a bit of a comment, and it's leading up to a question, if that's okay.
Yeah.
Excuse me. Because I think this is part of Good for the Whole. I don't think people realize how fucking big this is. So when I look at Bitcoin, for example, and you made the comment, you know, the U.S. is going to go to a strategic Bitcoin reserve. When you do the math, when they do it, they are literally going to eat up the next 7 to 8 years worth of production. And that's before BlackRock, ARK Investments, Vanguard, Fidelity, El Salvador, Bhutan, the 3 BRIC nations that are front running the US, JP Morgan, like the list goes on, before any other person buys a single fucking Bitcoin. So when USA. So when this happens, everyone's gonna rush in, and it's gonna be the biggest short squeeze ever. I'm a bit of an optimist. I think this thing literally 100x's in the next 5 years.
Yeah.
So that was just a general comment, and we have to be alive to it. Even if you don't believe it, you have to do your work. Now, one thing, and this is leading up to the question now, like I was sort of mapping this out, and there's about, you know, and I know like people don't really know for sure, like it's a little sketch, but there's about 500 to 600 crypto wallets on the planet right now. It's probably going to 1 billion by the end of this year, and then it'll doubles again. And then 3 weeks ago, I heard the fact that there's going to be potentially 1 billion AIs on the planet by the end of this year. And they're all interacting with crypto. That's going to be the native currency. And so the significance there is no cap. We don't have an 8.5 billion cap like we do on humans. You could have 100 billion, you could have 1 trillion AIs on this planet. So my question to you is like, when do you think the financial systems, like the banks, are going to be disintermediated and gone?
Oh, like completely gone.
Completely done. Because everyone's bypassing. Like you look at what happened, like the BRIC nations are getting off they want to get off the SWIFT system and the US dollars as quickly as they can. Like, and you just look at like what's happening on layer 2 with Bitcoin and sort of, you know, disintermediating Visa. Like when does this all happen in your?
To be honest, I don't think it will happen soon, because I think the TradFi companies, traditional finance companies, more than half will get left behind, right? They'll go the way of Polaroid, basically, right? But I think there'll be a few that are able to adapt into this new internet, into Web3, right? I think, especially with the stablecoin bill being passed end of this year, or by fall of this year, it will give the green light for banks to custody and transact in stablecoins. I think that will unlock a lot. And the banks that refuse to do that will get left behind, right? Because as I showed earlier, Bitcoin and crypto is growing faster than the rate of the internet. And the next generation, Gen Z, is more into crypto than they are stocks. So a bank that chooses to not basically go Web3 will get left behind by the next generation.
Two more questions.
Stablecoin's the most important thing in that ecosystem right now.
Yeah, it's the on-ramp, right? So for example, there's this great company called SpherePay. I love it. Not an investor in it, unfortunately, but great company. It connects your bank account to a crypto wallet, and they can create a stablecoin wallet for you, right? So you can wire up to $20 million in stablecoins straight to an address they have, and it will auto-convert that to your bank account within an hour in the same day. That's the on-ramp and off-ramp that's happening and being built. And there's a lot of investments, especially in the VC space, going into the stablecoin ecosystem because of this. Because this is just the US dollar, but imagine other cryptocurrencies. Imagine if you could just wire $1 million to an account and they give you Ethereum or Bitcoin, and vice versa. It's the on-ramp and off-ramp of crypto. This infrastructure, this plumbing and glue is being built right now. And all this has been happening against the current. And now for the first time in history, it's happening with the flow, with the current. I think there was one
Yeah,
question too.
just a little bit of a comment as well. So there's a ton of different crypto out there. My parents, for example, will never invest in an altcoin, right? And there's some real risks. I mean, there's custodian risks. There's rug pulls of, meme coins. They don't know, kind of what they're doing with that. The ETFs have changed the game, and I'd really just put it out there that anyone can go buy like FBTC, the Fidelity Bitcoin ETF. If you were talking to a relatively unsophisticated investor, would you be pointing them towards, like, they just say, I want some exposure to this asset class? Would you be pointing them towards an ETF like, the BTC ETF? Where would you point them if they're?
I would just point them to just buy Bitcoin.
Yeah.
Buy the large caps. So I didn't actually speak on this much, but our platform, we're actually launching AI indices in the coming month. Basically, think of it kind of like becoming a vanguard for crypto, but fully on-chain. With ETFs, you're buying Bitcoin, but you're still in Web 2.0. Somebody else is holding that Bitcoin for you.
Right.
Right? We want to stay in Web 3.0. The people who are deep in crypto, they don't go to centralized, like even me, I only go to exchanges to cash out, right? But I hold everything self-custody, my own wallets, my own funds, as they say in crypto, not your key, not your crypto, because somebody else can hack into it and take it or whatever, right? FTX, for example, right? The people who are trading on DEXs like Uniswap were able to avoid those pitfalls, right? So while ETFs are great for people who want to buy Bitcoin via their 401k or pension funds or what have you, I would still urge them to go to where the future is going in Web3. You can get wallets like Phantom Wallet, for example, it's a very popular one, or even MetaMask, but I prefer Phantom Wallet because it lets you custody both Bitcoin, Ethereum, and Solana assets. And that puts you in that ecosystem, right?
So, yeah, and I just throw it out there, you've heard us talk about Bitcoin over the years. I truly believe our kids will talk about owning a single Bitcoin like we would talk about owning, a block in Manhattan or, some imaginable asset, right? So $95K now, you could own something that I think our kids or grandkids would say is a miracle that you have a single whole Bitcoin. So just my.
And then there's companies like MicroStrategies, that
Michael Saylor.
You hear them talk about him a lot. Well, one more time.
I think was
one
there
more question? All right. One more. All right, go, Lord. Pass it. Pass it.
Oh.
Whoa.
I'm glad I looked.
Yeah.
No, you can throw it.
I hope this isn't like a total sideways, but I read this the other day, and you're the expert, and I thought we all should hear it. And that was that the quantum computing and the Q-Day that is coming will unravel cryptography and the basics of the blockchain, including the Bitcoin. And I'm curious what you think about that. And I read it, and I was like, I don't understand this technology, but
Yeah, I mean,
it feels like it should be coming up.
I would say, from what I've read, obviously I've not read the latest from this week or what have you. Crypto already has quantum-resistant hashing algorithms and cryptography algorithms, right? So most of crypto would be fine. If there's any cryptocurrency using a very outdated algorithm that's not quantum-resistant, will be affected.
What does that even mean, quantum resistant? If you don't
Well, the
mind me
cryptography.
asking.
Okay, let me try to maybe simplify it, right? So
Sorry.
why crypto can be or Bitcoin can be trusted is it's kind of like the code, like code cracking, the code that makes sure it's safe. The math behind it cannot be hacked by quantum computing math, right? So in the example they gave us, I think the other day, how I was able to solve something in 5 minutes that took basically forever, right?
Right.
Billions of years, or eons of years. But the actual math behind it, which is the cryptography, there's math that's very easy to be solved by quantum computers, and there's still math or algorithms that are resistant to quantum attacks. Right? So Bitcoin is fine. Bitcoin is not going to get hacked by a quantum computer unless there's an even superior quantum computer in the next 10 years, maybe. But as of right now, that's not possible.
So Ian's going to be here the rest of the time. So you guys, if you guys want to talk offline, he'll be here. And right now, go ahead, Mayor. Got to let the mayor ask a question.
No, here.
I just want to add one comment to that. We don't have a thing going on. You know, in Vancouver, 40% of the people would actually say, no, go ahead, kill them. And we're doing pretty good, 60%. Maybe like just for the good of whole, because I get that question all the time. And let's say you're completely wrong, which I don't think you're wrong, but let's say you're completely wrong and forget about 5 years. Think of, let's say in 2 years, there's quantum and it will hack, let's say Bitcoin, which, and to give you some context, Bitcoin is the actual, the blockchain is the most secure thing out there. There's literally there's a wallet with 1 million Bitcoin for everyone to see and no one's been able to hack it, okay? Let's say in 2 years when this happens, let's say Bitcoin's trading at $1 million. The whole address, like the market cap of Bitcoin is only 20 billion. They're not going to be the first target. The traditional banking system will be the first target. All your investments that are like traded on any exchange, like any of your shares will be a target. I would be more concerned about a nuclear war, planes dropping out of the sky, all your health records getting fucked up, all the land titles being rearranged, because those are all the soft targets. If we're like every single password on the entire planet will not be secure anymore. And if there was any place I would want to be, it would be in Bitcoin versus anything else. So we have way bigger challenges. You shouldn't use that as an impediment into getting into it because